The next topic is, can Libor be replaced? And I think fit for purpose, I think the Federal Home Loan Bank discount rate plays a really, really good role in terms of determining what is the average cost of funds for the Federal Home Loan Banks. And it's really, really important, I think, if you are in that consortium, well, then you know your cost of funds. It's the disco rate, and you want to lend at, a spread above the disco rate. But if you're a major international bank, you're not a government-sponsored entity. And in times of stress, you're going to have to pay more for funding than a Federal Home Loan Bank. On the Federal Home Loan Bank's own website, they in fact say that they tend to get lower cost of funding during times of stress because international investors believe that they're connected to the US government, just like Fannie and Freddie. How big is the Libor rate and what is it based on really? Well, there are 18 banks on the US dollar Libor panel. What do they represent to the global financial system? 9 of the 10 largest banks in the world are on that panel. And in fact, most of the largest 25 banks in the world are on that panel. Those 18 largest banks represent over $33 trillion worth of loans, over $33 trillion worth of assets. And each and every one of the treasurers at those banks is judged by how did you borrow money relative to the average cost of funds of all of our competitors, i.e. Libor. And the credit portfolio managers are judged by how were your returns relative to the cost of funds, Libor. So can it be replaced? Well, there's nothing else that represents the average cost of funds of the largest banks in the world. And it represents term, unsecured funding for this wide and important set of banks. So in terms of those banks using it, in terms of judging where they should lend money in a syndicated loan market in particular, it's hugely important. It is fit for purpose. Can it be replaced? If you went to a treasury bill rate, that's not where those banks fund. They can't fund like the U.S. government. Should those banks, go to a Federal Home Loan Bank rate, they can't fund at the Federal Home Loan Bank in times of stress. They're not connected to the U.S. government. They need something that's purpose-built for them, for what they do, and Libor fits that. So there isn't any other index that I found that does that. And if you look at the Wheatley Review, which had tremendous input from the industry, didn't find another index that fitted either.